G'day everyone, Jeremy King from Trading Safely with Sean Downey coming to you on this weekend. We've got our webinar tonight. We expect to be about 40 minutes tonight, covering most of the global markets, Euro, Pound, Dow, some of the bonds, precious metals. You're going to be able to get where we think markets are going over the next week, and you'll get a bit of insight into the key levels and which markets we're turning. Certainly, markets are at a very important point at the moment, and there's evidence of quite a few markets changing ahead of us. So I think you'll get a lot out of this hour, so welcome. Tonight, we will also be taking you through our new platform that we've released to our clients that are on subscription. We're pretty excited about that, and it's an excellent forum that we'll show you through the course of tonight. So welcome everyone. Hope you get a lot out tonight, and I'd just like to welcome Sean Downey from the UK. Sean, good evening. How you doing?
Yeah, I'm good. Wife's got me doing DIY today, so I've got to paint a great big dog lunch. So I'm quite happy to be sitting at my desk instead at the moment. DIY not my strong point, but there we go. So yes, it's going to be an interesting week. I think we've had a quick chat just before we've come on air about the things that are particularly interesting us, and it's the euro is definitely the main focus. I think just on a build-up for the week, I actually went back through some non-payroll days over the last few years. I was just trying to remember the last time that we had a payroll, regardless of what the number was, where the stock market didn't go up, and it's not very often. The payroll was in line with expectations, and so the stock market goes up. A couple of things about sectors I'm going to talk about. A couple of things happening there, so they're starting to get interesting. And we had some extreme volatility. We had a spike low at about 4:30 in the morning European time on oil, Thursday night, Friday morning. So some big volatility there. And the Canadian dollar, which we talked about over the last few weeks, continued its trend and then had a reversal, really a profit-taking sort of reversal on Friday. I don't think the major trend has changed, but it's probably got to do a bit of back and feel. It's been a one-way street there. But Canadian dollar has been part of our focus and will continue to be so, plus the euro. I suppose The only other one on commodities, corn is getting interesting, as is soya meal. So we haven't talked about commodities, those grains, very much, but we're starting to get to the time of the year where weather and planting starts getting important. So both of those appear to be forming a base. Probably some opportunities are going to come in them over the next week or so.
Yep, very good, very good. All right, well, I guess now's probably a good time to show people the new platform that we're using. We've moved to a new platform called Slack. We've got a Trading Safely online community here, and you can see in the left-hand side here all the markets we're covering. We've got the ASX 200, Aussie dollar, copper, corn, Dow, euro, pound, gold, hot markets and hot stocks, nat gas, oil. We've got a track our trades section. We analyse sectors, silver, soybeans, S&P 500. We've got this timing reversals section, which actually shows you which markets week ahead that we're expecting to turn. This is a really advanced feature, so we'll cover this through tonight, but we can actually tell with a reasonable degree of certainty which markets are placed to turn for the week ahead, which markets are placed to turn for the month ahead, and which markets are placed well to turn for the quarter ahead. So we know exactly where to focus. We've also got 30-year bonds, yen, wheat, and yearly charts where we give our view on some of the longer-term markets. For instance, like here's Aussie dollar. We'll probably cover that tonight, but it looks like it's in pretty bad shape, having had a yearly close under the lower upper trend line last year, and now a retest of that channel. lower channel line and fail. It's opening up support at 60 cents. So all of these wonderful features are all at your fingertips, and you get live notification. You're able to message us in there. You can comment. You can click on the charts. So this is where the trading safely environment is going. And don't forget this free trial. We're going to have our new set of subscriptions available for you to look at through this week. We'll be releasing them onto the website, so you'll know exactly what markets and what benefits you're going to be able to get that will help you with your trading. So we're pretty pleased where things have got to, and just stay tuned this week for the subscription packages that are coming out. So just coming back to the markets, I've just got a chart of the euro, and it really is at a very, very critical point as far as we can tell, because I've got a yearly chart of the euro US dollar here, and it's been in the last low was Feb 85, and right now we've just done a full price cycle, which is 31.4 years from that low to the current sort of time. Last year we broke under on a closing basis, and right now we have tested all the way back up to the upper bullish annual pivot, which happens to coincide precisely with the long-term uptrend line. So if I was to zoom in now, everyone can see this. I'm just going to highlight it for you. Everyone can see that little orange line there. If I come into now 720-minute chart of the euro, that is that little orange line. So what we're saying is, last year, when you look at the big picture, we closed under. That was a major break. This rally back test the line is very typical in any time frame, and at the annual level, it's just completed. So we are looking for selling opportunities. If we get a spike high over the French election anywhere in this zone, we are looking to sell it if we get a signal. And so we'll either take a divergent sell signal, or if we get a spike high and then it closes back lower and closes badly, well, that will be enough for me. The broader downtrend is down. The yearly trend is down, the semi-annual trend is down, and the quarterly trend is down. This is just merely a retest of the long-term uptrend line that we've broken. So, I mean, this could be an epic trade to the downside, we think, as long as it does actually reverse. So that is a big one. We were touching on, Julian and I were chatting about some call options on a product on the NYSE called EUO. Now that's an ETF that the 2 times short euro US dollar. So when the euro goes down, this ETF goes up in value, and we were looking at some of the short-dated call options that are available at the moment, with basically 12 days until expiry. They're dirt cheap. I think the at the money 25 strike call options were circa 30 cents, and the 26s were circa 10 to 15 cents with 12 days. So that does seem very, very cheap, and an excellent opportunity. I think, for me personally, it's something I'm looking at. John, what did you think of that opportunity there?
I thought it was Christmas and birthdays, wedding anniversary, everything. I couldn't believe how cheap they were. If we do spike higher, then the EUO calls, you'll probably be able to move down a strike to possibly the 24 calls, and they'll probably be, again, very, very cheap. What I really like about it is you know what you're risking. If you're going to trade the spot or you're going to trade the futures, it could be very volatile. Probably will be. We are looking, for a spike higher that then reverses. So to me, it's a tremendous play. I will be filling my boots on anything. I mean, that's, you know, you sit here all year, year in, year out, and really, I would say probably in any given year, there's probably a half a dozen really great opportunities, and there hasn't been very much this year. And this one's the first one that, apart from the Canadian dollar a few weeks ago, this is the first one that sort of really appeals, because the risk is very, very low. You know, I don't mind risking 30 cents. I mean, that's nothing. And you've got leverage. It's a 2 times move. So if it does catch, then the move back the other way could be very violent. I really like, we haven't talked too much about it, I really like short-dated options that are mispriced. Citibank once made tens of millions on one of my calls on an interest rate market where we bought some BOBL options, which is the 5-year German interest rate. We paid literally 1 cent for them with, I think, 3 days to go to expiry. And they made tens of millions out of that. And that's what we really like. Sometimes technicals marry up with really, really big levels, which then also marry up with options that just happen to only have a very short time to go. Market makers in options, they just price it mathematically. Many years ago, I did what I personally think is the best presentation I've ever done, which was technical analysis for option market makers. It was appallingly attended. I think one person really got it, who was a bit technical anyway. And I thought it was the best thing I'd ever done by a mile. And it was really about doing those things. But of course, option market makers, they're not really technical analysts. It'd be nice, it'd be good if a few of them were. They just look at the mathematical models and they'll price it accordingly and hedge up accordingly. So they will be eating like a sparrow on this one, and potentially going to the dunny like an elephant. So I'm quite happy to be that elephant, and I don't mind sort of doing it the other way around. So I think it's the risk on it is great, and very much worthwhile doing. And you know, effectively, you're paying $30 for every 100 shares of that position, and then whatever your commission is. So it's very, very, you know, you can have quite a small account and you could still have some decent leverage there. So this is trade of the year so far for me, no doubt about it.
Yep. And when you look, when we draw the annual channel, the down channel here, just to give you an indication of where this market can go. At least this year, you've got support lying down at 97.20. But if we move a year ahead, you know, the market can rapidly fall. There is space lining up underneath, and you know, if we were to crack on a closing basis underneath 97.29, like under here at the end of the year, then I guess the best way to describe that would be bloodshed. And the reason why is because there's just nothing underneath it to support it. And the markets like to hold angles, and the angles to the downside under this 97, 98 area are just nasty. There just isn't much support. There's a couple of places along the way, you know, like in the 80s and then down to the 60s. So strap yourself in, I think, is the warning. And now would seemingly be this next week would seem to be uber critical. This could be the high that lasts for what could be many years. So just be very careful here. And if it does crack low and reverse, you know, like if we do end up on a closing basis under the lower pivots next week, that is a clear message for you to get in. And just while we're here, let's just check out what those pivots will be. We can forecast the pivots. So that's them there. So all you need really for next week is like a weekly close under 1.093. So
well, that depends where the opening is tonight as well.
Yes, exactly right.
It might just open higher, in which case the lower pivot would be even closer. We don't really, I mean, that's where you check the spot market, which will probably open unchanged because it's a bit illiquid, but the futures, there might be a chance that they already know which way the French elections are going, so the futures could just gap higher, like it did a few weeks ago, and that will make that lower weekly reversal that much closer, which is tremendous. I think just on the downside, big picture stuff, with the yearly target is 98.30.
Yeah.
You crack 103.40 on the spot. That's the major peak expansion level, which you've just marked there. Yeah. So that's you take that out, and then there's 500 points. It seems a long way away. For people who look at the fundamentals or stuff, trying to work out what would make the euro go down so much. I don't like to speculate too much on it, but one thing I do notice is that the negotiations between Europe and Britain with Brexit and all this sort of stuff seems to be a bit of a one-way shop, in that everyone seems to think that it's bad for Britain and great for Europe, all this hardline stuff. Well, we're a much bigger customer of theirs than they are of us. So them playing hardball just seems a bit the market doesn't seem to get the fact that actually Europe playing hardball is not really doing them any favours at all, because we do a lot more with them than what they do with us. Obviously, because there's 27 of them and only one. And that might be something that the market sort of picks up on at some point. Where I remember when the Brexit vote came, and at the time last year, my first thought was it was really great for the pound against the euro, purely because of that reason. And the euro pound did drop quite considerably over the next 2 or 3 weeks, but then since then hasn't really done a huge amount. But that's the sort of thing. Also got the potential for repatriation of dollars. So you can get what you really want for a currency to move is one side of the pair being bullish and the other side of the pair being bearish. So you have bullish forces in the US dollar, where repatriation for tax reasons could be a lot of selling of euros to buy dollars. And then you've got inherent weaknesses in the euro anyway, and that's when you get real trends. And that's why sometimes on the cross rates they can just go on and on and on. So a few things to just think about moving forward.
Yep. While we're on currencies, I might just touch on pound and Aussie dollars as well, because they're shaping up for similar amount of destruction, seemingly. I might actually just flick over to our Trading Safely online. Now, this is the paid site if you want to get involved. So here it is here, the Aussie dollar. So the Aussie dollar's also done a similar thing to the euro insofar as 2016, we got a clear closing below the uptrend. It's been in place since 2000. And usually when you break the trend, the first thing that happens on any time frame is that you retest the trend line, you back test it. And they happen to correspond with the annual upper bullish level there at 77.57. It's quite interesting, the Aussie dollar. It's had 3 cracks at the title. That's around that 78.20 level. Really, the key level for it to take out is that 78.37 on an annual closing basis. If that was to happen, the Aussie dollar could rip up to 95.79 in a flash, but it didn't. It had 3 pokes had 3 cracks at the title up here at around 78, and it's failed. And so that now means what can't go up must go down. And there are some levels when you look at smaller time frames. This is an annual chart. When you look at small time frames, there are some other levels that it needs to bump into on the way down. But the bottom line is the support's actually 50 cents. So you've got the euro painting a nasty picture. You've got the Aussie painting a nasty picture. Pound is also painting a nasty picture, despite the fact that it's had a corrective rally. Last year the pound got smashed and had a very, very nasty close under the final support that held for basically, circa 15 years. Took that out, and we're doing the same thing. We're just back testing resistance that will, in all likelihood, turn back down. And some of the downside targets for the pound are just hideous. I mean, you're talking like 80 cents and lower. So if we see the pound move up towards this 135, or if it starts to turn down from here, look at the upside and downside. It's staring you in the face, clearly down, and the long-term angle of the market is down. So you can see the long-term trends. They're down, not up. So we're waiting to sell the pound against the US dollar. So the writings on the wall, the pound, the euro, the Aussie, they all look potentially extremely ugly. But you can see one thing, the dollar index is going to turn at some stage and have a savage move up. I think that's the key takeaway for me on the US dollar pairs. And I know Sean wrote an article the other day. If we come into our general analysis, Sean did an article that was looking at the US dollar against a bunch of emerging currencies: the Taiwan dollar, the Polish zloty, the Russian ruble. You know, they're all showing signs of reversing and moving higher. So common theme, the move lower in the dollar has taken itself to the opposite extreme, because when we got to the end of last year, we actually got up right up to, in fact, if I pull it up on the chart, at the end of last year, we got right up to the annual bullish level, and we missed it by about, I don't know, 20 ticks. There's nothing. There it is there. Right, we missed it by like a few ticks to close over that bullish level, and we didn't. And that's exactly what markets do. When they fail by that, they can just turn back and then test the low one. But don't for a second think that this is like going down. There's no indication at the highest time frame or the yearly level that the dollar's going down. And I'm happy to eat my words if we start closing back under 97.22 at the end of the year. But this is exactly the buying zone typically when you get into a long-term uptrend. When it pulls down to this lower bearish pivot in an uptrend, that's where you should be buying it. And the market is telling us across lots of different markets. The euro US dollar, we just saw it. It's backtesting the trend line. We have a long-term trend line. Here it is again. You know, I don't want to like go on too much about this, but just get ready. You know, there it is there. The euro's backtesting that trend line. It can turn down from there heavily. The pound's doing the same. It's just backtesting breakdown point. Okay, there it is. There's the breakdown point. We're just retesting everything. So get ready for the dollar to turn up and the pairs to turn down.
Just one thing on going back to the Aussie. In spite of the rally on Friday, spot and futures both closed below their weekly lower pivot.
Yeah, bearish closes as well.
So
indeed,
actually, in spite of a reversal Friday, it didn't manage to close. You know, it actually closed weak for the week. So we always look at that just as a reference point to see in the shorter time frames where we're going there. So it got close, but it didn't quite do it, did it? You know.
Yeah, so what's Sean saying for anyone that's new, that's listening? So we've got these little yellow up and down bars. They're the weekly bullish and bearish levels. That's these ones. And then we've got the monthly bullish, which is the pink ones, and the monthly bearish underneath. We've got the quarterly bullish up there and the quarterly bearish down here. And what Sean's saying is, despite the fact that early in the week we kind of ripped up and we tested the upper weekly bullish, which is that yellow level there, end of the week on the very last day, see how we closed just under it? That's a bearish close.
Yep.
And bearish closes are indicative of future weakness. And there's a few major levels. Look, the main one on the annual candle is 60 cents. But the ones that you're going to bump into on the way down are really this one here. That's your last year's annual close. It will do work there. And then final monthly peak at 71.5. And then from there, it's just like the previous year's low. And then you've got the lowest annual support. And then really the actual closing low from many years ago down at 60, which would be a place we'd be looking for the market to reverse. So, yeah, going to be an interesting month ahead, I reckon, for the dollar. Okay, so moving on, we've been banging on about currencies. Might as well have a quick look at US dollar yen. I think that is a place where it can turn down. Bigger picture, I think the US dollar yen is still going up, and we had a nice move out of the lower annual support. We flagged that a while ago as a potential zone for the market to slingshot up. Now these little white dots, our subscribers will recognise those. When you see those, it means that the week to the month relationship has become overbought, and now for the week ahead, we're moving into the opposite of that, where we're likely to see it becoming overbought at the week to month level. With this sort of up move in the yen, I think it is going higher, but I do think this week we'll probably see a drop back, and I'll be looking to sort of buy on any dip from here on in. If I look at the close, look at that right on the close, it just didn't quite take out the. I look there, just didn't quite take out the level, so that's a fail. And we've got a couple of valid sell signals on it right off this monthly closing peak. So I expect the yen to back test. I don't know. I think right here, this is last month's close, around 1.52, and then from there it's possible it goes higher. So if you look at the yen on the hook handle, it's still in bullish mode off the low. We've not had any bearish outcomes since. We've managed to hold above all of these lower pivots on a closing basis. So, until that happens, the market's bullish, and that we zoom back into the short term. We've just bounced off a major long-term support down here. We've got a little bit overbought in the short term. Don't try and sell it. I'd be waiting to buy it around 1150 would probably be a pretty good area, because the previous month's close is always a solid support. And that kind of probably has implications for equities. The Dow had it's a pretty punchy close last week. Let's have a look at the Dow Jones cash. Look, before we do anything, the Dow Jones is the long-term uptrend. Let's be clear about that. Come back into the yearly charts on our analytical page. Where's the Dow? DAX. There's Dow. Okay, so when we look at a long-term chart of the Dow, we are at an upper resistance level. This is a place where typically a weak market might fail. There is resistance up here around the 21,600 level, but you can see the angle of the market is probably the main takeaway. When you look at this chart, what I want you to look at is the angle of those white lines, because the angle is going to tell you where this market is going to go in the longer term. The longer term, it's saying it's clearly up. Okay, so when you look at the shorter term, for anyone that is holding a long position, I'm wondering, what is the level where you need to question being long? Well, it's here. It's a monthly close under 19,750, and that happens to coincide with the quarterly bearish level there, and it's also last year's close. So until then, I would not even be blinking at trying to sell the Dow on any sort of long-term basis. It is in a multiple time frame uptrend, and don't mess with the trend. John, what do you reckon?
Yes, it's we've had earnings seasons out the way pretty much. We had Apple disappointed a little bit, but stock didn't go down very much. Facebook, again, they've been on a rip. I mean, there's a bit of a disconnect in that the Nasdaq's very, very strong. You don't stand in front of that one. The Russell, which is the broader, smaller market, is actually quite weak. It's not really doing very well at all, and the S&P and the Dow are a bit in the middle. But there's no compelling reason to get short, and sort of longer term, the uptrend's still intact. So looking to sell, it's about sectors. Got to get, if you're going to get short this market, you rapidly come to the point over the years where I say, well, it's very rare I actually want to sell the index itself. I'm more than happy to sell certain sectors that have become fashionable and start becoming unfashionable. So semiconductors is definitely in that space. We talked about that last week. Leisure and gaming is the one that's taking over. So hotels and computer games, they've ripped in the last 2 weeks. So they're starting to become of interest. And the semiconductors, we're looking for more chinks in the armor. We're not quite there yet, but it will come.
Really, I mean, when you look at this chart, if you're late to the game and you're not long equities and you think it's overpriced, well, it is dangerous coming in at this level. So at that point, you need to ask yourself, well, okay, well, what is the level where I would buy, and what is the level if it does go higher, and what is the level I would buy if it does happen to go lower, and where is there a serious break in trend? And I think for a serious break in trend, you're talking about a monthly close under here, under 15,000, sort of 300. For an intermediate, a serious break in trend, you're probably looking at around the 17,500 level. For a heads up, the trend's not well, it's here, 19,750. If you're looking to get long, then you need to start seeing like a monthly closing basis above the all-time high is probably a fair indication of breaking out. What you can sometimes see, like when we see these little pink dots here, it's telling us that the market's potentially overbought. And you can see in this instance that the market did sort of take a leg down, but at times that doesn't happen. Like here, like you're early in the month and you just explode through that overbought zone. So that can happen, and that's why if you must have a level where if the market does break out, that you do act, because the market can leave you behind. And you're sitting there wondering whether you should be buying at the top. You need to understand what levels you should buy, as well as sell. So for me, it's like sell under here on a monthly closing basis. But if we start taking out 21,400 on a monthly close, you should be in the market. Well, not you should be, but I would be.
Yeah, I mean, the thing is, everyone's waiting for a dip. Professional markets sitting there, oh, we'll wait for the dip, and that's why it doesn't really come. I mean, the Dow had a reasonable dip. I mean, that lasted 6-8 weeks, but it was a slow, steady. It's nothing spectacular. There was really only 2 big down days in the whole of that period, and that's what the problem with the market is. When you look at Amazon and Google and Facebook and Apple, they're all breaking out. They have broken out, or they are breaking out based on the numbers. And so, do you really want to stand in the way of these companies? They're so big and they influence the indexes. I mean, one of the things to remember, if Amazon or Google miss, the Nasdaq doesn't really go down very much, because it's just, even though it's a big stock in the Nasdaq futures, as it were, they just ignore it. Whereas if Amazon and Google beat, they think the whole market's great, and so the index goes up. So it's almost like it's skewed one way. It's a little bit what I talked about the Canadian dollar the other week, where I said, well, the correlation of oil is only correlating one way, and it's a little bit like this with the Nasdaq stocks. So don't stand in the way. If they do correct, the breakout levels, if we've got buy signals there, then they would be opportunities to get long. So that's the way to go with that one.
And just zooming into this sort of long-term quarterly chart of the Dow, like there's support there at 20,000. So that's the channel. That's the channel line from the previous high. We're broken out of that channel, so it would be perfectly normal if we did have a pullback to back test this channel, just as when we showed you that chart of the euro earlier, where it busted down below that long-term uptrend channel and turned around and back tested it. Well, there's nothing saying the Dow couldn't, in theory, can't rip back down here and test out this level there at 20,000, and that would be a great place to buy it, because back under there, well, okay, if I'm back under this channel, then I can come down and test this zone, but that's also an excellent place to be buying and adding to a longer term position. So, we have, this is a very significant move. This candle here is a very significant candle because it's moved out of this long-term channel that we've been in for such a long time. You're talking about, 8 years, and we're out of it now. So that's moving into a different level. So pay attention, and certainly a close above, that's 21,644. That's the target for this year. If we start closing above that, then you're opening up this enormous gap where it can, just explode. So that's where the line in the sand is, guys. It's around 20,000 or 19,750, around there. And then on the upside, you've got 21.6, and then there's just a big hole to the upside. So just bear that in mind. And while we're here, I'll just cover off on the All Ords again. It's done a similar thing. It's been in this wedge here for many, many, many years, and we're finally closed above it. It can comfortably back test down here to 5,700 before higher. The angles, all these white lines are up. That's the way the market's going to go. So we might just go on crude now, because that had a pretty volatile move down, and I just want to show people on the annual chart that oil and why it's swinging around the way it is. Because we had in the 2012 high, we've had 1, 2, 3, 4 years down, and we had some pretty big candles in there, including this big breakdown candle. So when you get volatility like that in history, then it's natural for the market to swing around in large degrees. And so when we look at the upper pivot for this year at 68.5, and we look at the lower pivot down here at the closing support down at 32, that's a big range, 32 to 68. So if you just bear that in mind, and don't forget last year we had this bullish close, we took out the upper pivot after bouncing off support. So when you've got this massive range, and now if I zoom back into the short term, now you can understand why oil is swinging around all over the place. It's because of the previous volatility. That's why we're getting this move from here. We're swinging from 47 up to, the previous year's close at 53.85. It's a big move, and then down again. But, all we're doing is oscillating between monthly levels. There's nothing actually unusual going on. Like here, it didn't close under that bearish monthly level. We've just been trading between the ranges. There's no actual bearish signals going on anywhere with oil. We're flown out of this monthly bearish level. So look at the annual chart. It's telling you this is why oil's swinging around, because there's room there. It doesn't mean it's bearish because it's ripped down and tested support. It's doing it because it's allowed to do it, because the market's got space at the moment. So when would I be wrong? For me, if I see a close under here at the end of June, then yeah, sure. I think if that happens, and I think we're coming back to test this support. But if oil's still in a bullish close from last year. Last year we closed up here. That's a bullish close. So if oil can hold this support, a deep test of quarterly support, this is the quarterly bearish level at 42.20. If we're above that at the end of June, there's no reason it can't then turn around and go test out, the bullish quarterly level up here at 55. So I think oil's been fairly confusing for a lot of traders, but the reason why is because it's got a lot of space at the moment to move. And I guess the bottom line for me is I'm watching it swing around dollars, but I'm not actually seeing any change in the trend.
No, it was a spike low in the middle of the night for the bottom dollar of that move. We actually got a time continuation buy and a pops buy, and we closed back above the monthly peak as well. Ideally, I'd like to see it get down to that semi-annual, annual zone, below the recent low. That would be the hit that target, which would be the opposite of really what the euro's doing, isn't it? So that would be the ideal solution. But it felt like a bit of an exhaustive move. One good thing in the longer term, where we are still bullish on the year, is it's knocked out all the weak longs. Yeah, a huge amount. I don't talk about the commitments to traders too much. I think the rules of engagement have changed over the years, so it's not relevant to get too married to what some people do on that. But a lot of the longs have been kicked out, so it means that in time there's room for fuel to push it higher. So ideally, move down to those semi-annual and annual. If not, looking for it to hold that 45.92 on the monthly level and go from there.
Yeah, and nat gas is in many respects a similar story in that it's bounced off of major support a couple of years in a row, and then here last year on nat gas we got a sort of an annual buy signal followed by a deep test of the lower bearish pivot, which is held, and we've bounced straight out of there. And right now we are sitting at that annual level, so watch out for nat gas to move higher. If you look at the short-term charts, you're going to see. Look, the basic story is it's when you hit a deep annual support, the market bounces. It gets overbought in the short term, and it has to have a deep correction when you're in an annual trend. When you get an annual buy signal, it means at the quarterly level you got overbought, which then results in a big deep down test. So if I just shrink this up, I'll show you just exactly what nat gas has done. Okay, so there's 2017. That was the buy signal up here. Here's this little orange dash line there. That's the upper annual level. We closed all the way up here, but in so doing, got really overbought. So if you're a monthly trend trader, that would have been saying, actually, mate, you've got to sell here. So this whole move down was straight into support at the annual level. The annual level held, and now we are rejoining the trend. So the trend for nat gas is up as far as I can tell. This little orange line here is a key annual support. So if we can hold there, nat gas looks good for upside. And the next step for me would be a June closing above 35.96. That would be extremely bullish.
Yeah, we had a stochastic based buy divergent signal on Friday in sideways. It's interesting.
Yeah. We look at the 1,000-day profile. Won't spend too much time. Yeah, we're sort of sitting right at the top of it. But what I like to see is, okay, so these pink lines are the month. So there's the end of the month there. So when I look at the close of the end of the month, it's here. And when I line that up with the volume profile, we're like sitting right above it, which is, if a market's weak, it won't be sitting above the volume profile, the top of the ledge. It'll be down here somewhere if it's weak, and it can't can't follow through. So look, if you're not in that gas, for us, we always like to see sort of a weekly close. So that would be, the projected pivots are up here. If you start seeing a weekly close above 33.95, it's telling you the market's moving high. And as Sean mentioned, we did have a buy signal on Friday. So
also worth pointing out there, just when we do sectors, oil and gas sector, it's broken down into a lot of subsections, but it's down in the low 190s. So oil and gas is right at the bottom of the pile. So certainly, if stocks that are purely nat gas are certainly worth investigating.
Yep.
I'll be having a look through the week, see what's there.
Yeah, so pretty clear where you're wrong there in nat gas. It's a weekly close sort of under 31.71. If you're trying to enter this week, trying to get long, you're wrong. If it closes under 31.71. If you're looking to get long, you won't be looking for a weekly close over 33.95, and then try and buy a pullback from there. So let's have a look at some other markets. So currencies, equities. Do want to have a look at gold. Gold, I think, is wrong footing everyone. It's done an excellent job. And that's what markets do best. They just wrong foot nearly everyone. So I might just take a quick look at the big picture as well for gold, so everyone's nice and clear. Okay, so gold bounced off major yearly support at 1,046. That's held. Really, the key level going forward. If we look at this turning point at the bottom, there is the closing low. If we were to close above the high of that closing low at 1307.8, then this market's going to go very high. As of today, what we've seen is a test of this upper pivot at 1253, even higher actually. We've come back and tested, nearly 1307.8. If I zoom into the short term, gold, from what I could tell, you probably need to look at let's have a look at weekly trend for gold. Gold's essentially rotating at the moment. It's going from being in a bigger picture. Gold is going up. There's no two ways about it. Like, if you look at this market, this pullback over the last few years is just a pullback in an uptrend. So gold will turn, and it will go a lot higher. It's a matter of when. And so when you look into the shorter time frames, gold, for those of you that have been watching us for a while, at the end of last year, it closed neutral on an annual basis, and then it was oversold and had a corrective rally up to the high. And then more recently, at the end of March, it took out the quarterly bullish level, which is, I'm just trying to find where it is. Here it is there. So that little brown dashed line there, we closed above it. So despite the fact that gold's been going down for the last 5 years, it is in a broader uptrend. Last year it did close above that quarterly bullish. We've had a move higher. In the shorter term, the last couple of months, we couldn't take out that upper bullish pivot there. We couldn't take out this one. And then at the same time, we had this quarterly overbought, all these brown dots. We had this weekly overbought, all these white dots. And so that's why gold's been heading down. Now, at the end of March, we did close, which is basically here, this 1265 zone. We did close above last month's high we closed above this weekly bullish. And so we've had this corrective move down due to this weekly overbought. But if I look at the week ahead, we're now heading into the opposite of the high, which is where this little yellow puppy here, the lower yellow is below the lower pink. So next week we're going to see white dots here. Be careful if you are short gold. This is a point where it can turn up. If you look at like a longer term chart, it looks like we've had a nasty snap here on gold. But if I add in the peaks, okay, so last month we said, all right, here we closed above this weekly support. Might be a chance that it's bullish. That hasn't proved to be the case. It's snapped lower, but just beware, because as of this week, it is now moving into an oversold position. And in light of the fact that we had this quarterly buy signal back here, and in light of the fact that we closed last month above last month's high and above this weekly support, this move down here could be a sucker punch. So be very careful if you're short gold. It may move high, and it may have something to do with this French election. So just be careful. You are moving into oversold, so be careful. Sean, it's a bit of a minefield, gold, because it does, to me, it looks like it's rotating longer term. The time frames are turning over. This is why you're getting chopped.
Well, yeah, it is. Do you want to call up silver? Because I think silver's really interesting as well. We had a bullwhip and a time continuation, not the time continuation.
I think that washed out in the end and ended up down.
No, it stayed just.
Oh, okay.
Yeah, I thought it wouldn't actually, because it wasn't particularly great close, but it's a very, very weak buy signal, certainly the time continuation one.
Right.
But as you can see, we're pretty close to some big levels.
Yeah, look down here, mate. As well.
Yeah, exactly. The weekly is below the weekly low is below I think the semi-annual and the semi-annual and the pink line as well. So we're actually more overextended in silver than what we are in gold. I mean, it's and we've had the first signs of some sort of stabilization. There's a monthly peak expansion, that one down there at 1570. Yep. So if we spike down there, you're below the weekly target. Even tomorrow, who knows what gold and silver is going to do on France. So down at 1570, that would be signaling, I would regard it as an extreme. And if we get a reversal from there, then I'd be very interested in it. For those of you who want to trade stocks on that, the obvious one to do is code SLW, Silver Wheaton. So that just tracks price of silver pretty much.
Okay. Yeah, so silver's got a lot of levels here. There's last year's close at 1596. Got the quarterly bearish there at 1615, and you've got the final monthly pivot there at 1570, and you are moving into oversold at the weekly to monthly level. And how do I know it's oversold? It's when this yellow lower pivot moves below the pink. That tells me this is a zone where it can turn back up. All right, so next, so I've done metals.
There's just one stock I wanted to talk about that's on our position list, which is VIAB.
Yep.
Viacom. You had the sell signal about a month or so ago at the final monthly level. Just wait for it to come up. Yeah, you can see it there, that black square. Yeah, there's also a red. Yeah, so had the short there, and the market, a good example of the market sort of going up and this stock just performing pretty awful. And by the time its results came out, you'd think the results were on the Wednesday, that great big open and move down lower. It was actually the day before results. That opening didn't last very long. It was about a minute. So it got slammed ahead of its results. Its results then came out on Thursday morning, and you can see that it gapped lower again. You would have thought that this stock missed badly, or the perception was that it was going to miss badly, and that's what made it go down on the Wednesday. And then it did miss badly on the Thursday, and so it went down again. Couldn't be further from the truth. So this is really important. Anyone who, if you think that commentators out there have the slightest clue what the price action is going to be based on whether they beat or miss, they are very much mistaken. I was firmly of the conviction they beat in a big way. I was thinking that, logic tells you that it's going to open higher on Thursday, and it opened down 8%. It was very, very volatile. Nobody knows what the results are going to be, and anyone who tells you otherwise is delusional. And they certainly have no idea what the price action is going to be. And this is an example of a sector or a stock that's unfashionable. So it didn't matter what the results were. It beat, and it's down 10%. Yeah. Who knows what it would have done if it missed? I mean, it probably would have been down 20%. Yeah. So that position, advised to take some profits ahead of the results, so took 25% off because you don't want to, you don't know what the results are going to be. And then, as it dropped another 10%, another 25% off. But you can see it hit that white line, which is
that's last year's close.
There you go. So it went straight to it and just sort of recovered. People can follow the signals and decide whether to keep it. The stock's down 35% from the sell signal. So some people, if they wish to just take the profits, then they can be my guest. But we'll see.
Yeah, it's the annual close is a very powerful level. Under there's a big gap for Viacom. There's just, this is why there's the yearly closes so critical. Under there, this thing can open up like a lot lower. So from the bullish side, however, typically when you get the closing low, you're looking for a close above the high of that closing low. So close above basically 47 on a yearly basis would probably be a buy signal from Viacom if it does happen to turn around. Very good. Look, we've probably been talking for 50 minutes now. We could probably have a quick look at Canadian dollar. See where that is, and we might just pull the pin there so we don't run up too long.
Yeah, that'd be good.
We'll just have a look at the short term and the long term chart. It's always such a good idea. I went through all our annual charts today. You get such a great view of what the big picture is. I highly recommend everyone, if you're trading anything, go and have a look at an annual chart so you understand what the big picture is doing. We're zooming back in. Let's have a look at CAD. Okay, so if I look at that objectively, a couple of years ago we broke out of resistance, and we in 2016 we did a deep test of support, which held on a closing basis, and now we are trading above last year's close. So the CAD is extremely bullish as long as it can hang on to this. Really the next target is really this high here at 1.47 on an annual basis. So zooming into the short term, okay, yes, we've become slightly overbought in the short term. This is where the market can kind of pull back. We are in the middle of the quarter. This is the time where markets can reverse, the middle of the month, the middle of the week, the middle of the quarter, the middle of the year. But any test of support that holds and turns back up again, I reckon that's a pretty compelling long-term buy at the moment. For me, I'd probably be wrong if we had, I'll just put the pivots back in. Yeah, if you start seeing a monthly close back under 134, I think there's a problem. Sean?
Yeah, exactly. 134 was the breakout that talked about on the report that was produced a few weeks ago. if you look at it on the crosses, the EuroCAD got pretty close to reaching an upside target. So it looks like a bit of back and fill, but there's no doubt that the bigger trend remains intact. We can't keep on going in one direction forever. Yeah, I mean, the EuroCAD reached its annual target this week. Just going to do pound CAD as well. Looks like a bit of back and fill, but actually, when you look at those annual pivots, they're a long way away, aren't they? I mean,
yeah, they really are.
You know, it's so sometimes you can get a little bit caught up in it.
I like this deep test as well. This deep test of support last year that went right through this 130.50 level, went under the annual lower bearish pivot, a spike low. And now we're trading back above last year's close. I mean, this thing can just explode up. So yes, we had a little short-term sell signal, and I'll tell you why. It's because it's been going, if you look at this study here at the bottom, it's been going up for 10 days in a row. Of course, it's going to have a breather. But the critical thing, I think, is a monthly close on the 134. If this turns back up, I reckon that's an awesome buy. I'm looking to, I was having this conversation with a mate the other day. Oh, do you buy the breakout? And it's like, well, generally at the breakout run and you wait for the pullback. Well, guess what? This is the pullback coming now. So get ready to watch for a reversal from this pullback. And if it turns back up, it's probably going to be heading not just a little way, but potentially all the way back up to here. And that's just a start. Because through there, you're then talking about up here. But yeah, I reckon, Sean, is there some, I know we haven't touched on bonds, but they've kind of been flapping around a bit. They're in a downtrend. They did have a bit of a bullish close. Just, do you want to cover it quickly?
They're a bit of a mess, to be honest with you. We've got, we've had a couple of, it's a bit choppy. You've got some real divergences between global bond markets. So you've got the US almost going in the opposite direction to Europe in certain cases. The gilt's been interesting in that it's been the strongest of the lot. That's the UK in the UK futures. So a bit of a mess. At some point they'll become clearer. So don't think, as you can see, look, we're just stuck, aren't we? Right in the bang smack in the middle of everything. So we look for opportunity. We don't try and force things. The one that I would look at, for me in Europe, the bobble is the key one. It held a monthly breakout point about 6 weeks ago, rallied all the way back up to the top of the trend, got a sell signal all the way back down again. And we're pretty, that's the one that I'm watching as a clue for whether rates are going up or down, but not much to say on bonds.
Yeah, it's really just wedged between a couple of these annual levels, but you know, I think that was a pretty major high there last year, and capital's just flapping around. There's a lot of money in bonds, just trying to find a home. It's, you know, with the Dow where it is, you can kind of understand why the bonds are flapping around, because they're worried about moving into a what to many people seems like a seemingly overbought equity market. But the reality is, when you look at the long-term uptrends, the angles are steeply up, and you know, the money from bonds can clearly go into equities and drive them a lot higher. All right, on that note, I reckon we're just going to park it there. Everyone, super excited about this new site. If you want to come in and get like 24-hour round-the-clock analysis on global markets, we've got timing reversals where you can look week ahead, which market's going to turn. We've got our weekly webinar recorded. We've got yearly charts if you want to see what the bigger picture is. We've got closing update videos on a daily basis to tell you where everything is. And we've got Sean in the UK and me covering Asia now. So you've got all the support you need. If you do want to get involved, just go to the website at tradingsafely.com.au. This buy now page will be I'm not sure what's going on there, but that buy now page will be replaced this week with 4 sets, different levels of membership, from the basic level, I think you basically get access to 10 of the markets that we cover. What you don't get is access to the trades that we're doing. You don't get access to the high-end list of markets. You don't get access to some of the bespoke reports that we create. You don't get access to the one-on-one sessions, but you do get very, very, very good coverage of 10 global markets on a daily basis. So please have a look at our website later this week, and I'll remind you on the webinar next week, and you can check it out. So have a great week, and that's all from me. Over to you, Sean.
Okay, yeah, that's me done as well. Have a good week, everyone. Could be watch that Euro. Could be, that's the one.
Yeah, watch the Euro for a spanking after a potential spike high. So if you see it close bearish, look, on the longer term basis, the one you want to watch for the spot is 1.03. That monthly close under that, and it is a car crash. But in the short term, you've got levels up around 1.1 to 1.11 to 1.13, which are an excellent selling zone for a reversal with a limited risk to the upside. So enjoy that trade, and we'll cover that through the week for all our subscribers in depth. So hope you have a great week. We'll see you next weekend.
Okay, thanks. Yeah, bye-bye.
Cheers, Sean.